Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. Let's start, let's look for decent trading occasions. And as always, we start with the macro calendar, and you can see that we had an interest rate decision from New Zealand. Previous one, as you can see, was 1.75. The consensus was 150, so we are expecting the rates to go down, and it did happen. Later we had the press conference. This cut was expected, and it was delivered, and but it still caused a drop on the New Zealand dollar, well, mostly due to the press conference. We had a huge drop in New Zealand dollar, then a rebound, but it does not look good. It still does not look good, and well, we were expecting this yesterday, and I will show you this on the charts. Apart from this, calendar is pretty empty, so I guess we can look on the instruments right now. Here's the New Zealand dollar to Canadian dollar. You can see this huge drop. Decision statement. Now it's kind of a correction which can result with a bigger upswing. Yesterday I was telling you about the shooting star here on this instrument and about the sell signal, and it was a really nice sell signal, because if someone, for example, sold here after our webinar, here you have 60 pips stop loss, and the price went 110 pips lower, so almost 2-to-1 risk-to-reward ratio, and you would be still on profit right now, well, on a break even. So if someone opened this and managed to close it around here, that was a great call. Now entering with a short position, in my opinion, is a bit too risky. I would not say it's a good idea to enter with a short position, because this long tail on a daily chart does not look good. It looks more bullish than bearish, even despite this strong bearish situation here. We can start with Bitcoin, because Bitcoin is advancing higher again. So we went deeper inside this resistance. Price is doing pretty well right now. I told you that price closing a day above the yellow area will be a buy signal. So far it didn't happen, so sellers still have a chance for a correction. But if you're a seller, I think you should patiently wait for the breakout of the black line. As long as we stay above the black line, we don't have a sell signal. So this is Bitcoin. Now American dollar to Swiss franc. I also had a long position here. My stop loss is here. It's a very small position, less than 1% of my capital, exactly 1% of my capital. So even if it will result with a loss, it won't be a biggie. Yesterday at some point it was on a nice profit, but this can be considered as a false breakout, and actually I should have closed my position after this false breakout, but I kept it open, and maybe it is a bad idea. But anyway, I have my stop loss here. Maybe it will be triggered, maybe not. It was a position which was worth a try, definitely, because the setup was really good. For the long term, as long as we stay above the green area, we are on the buy signal. We should get a still positive sentiment. So maybe you can ask me why my stop loss is not here. Well, it was here before, but then I decided to move it below weekly lows. Because I think that the breakout of weekly lows will be significant enough for me to escape from my long position. Maybe the price will bounce from this area again. When I will see a bounce here, I will react on it, and maybe I will go maybe I will buy. Now New Zealand dollar to Canadian dollar, well, not much to add here on the weekly chart. Strong sell signal after the false breakout here in the bearish engulfing, but this rate decision and statement is creating a positive situation. Long tail V-shaped reversal. It's never good for the sellers when you have a V-shaped reversal. So I would be very cautious with the sell signal here, and I don't think that there is a sell signal here anymore. Now gold is doing very, very good, and this is what we were expecting yesterday. The big picture here is an upswing and a wedge, and the wedge ends, it seems like the wedge ends with the double bottom formation. We already managed to come back above the blue line. Now which is was a horizontal resistance. Now we are coming back above the black line, which was a dynamic resistance. The only resistance left is the red upper red line of the wedge. A breakout of the upper red line will be a signal to go long, and we are getting closer to it. If you want to see how the breakout of the wedge can look like, you can check American dollar to Russian ruble. We were telling you about this yesterday, that those two instruments are very similar to each other, but American dollar to ruble is much more advanced, because here we already had a breakout of the upper line of the wedge. And look what happened after the breakout of the upper line of the wedge in an uptrend. You do have an upswing. Here also double bottom formation, and a gold double bottom formation, so those setups are pretty much the same. On the euro to Russian ruble, we also do have a buy signal after breaking the bouncing from the horizontal support, breaking horizontal resistance and a dynamic resistance. With this kind of a price action, we should aim for the yellow area pretty soon. Now American dollar to Canadian dollar, here I also do have a buy signal, which is on a small loss right now, but pretty much like break-even point. I had my stop loss here below last week's lows. I can move my stop loss now higher below those two lows here. As you can see, slightly more than 1% of the risk of my capital, which is nothing. I play it very safe, and it still looks positive. The big picture here is the inverse head and shoulder formation bouncing from the long-term uptrend line. After this inverse head and shoulder formation and the breakout of the neckline, we do have a symmetric triangle pattern. We broke the upper line of the symmetric triangle pattern. We use the resistance as a support, and the price is going higher. Now dollar index is still under the influence of the false breakout pattern here above the horizontal resistance, but buyers seems pretty resilient to this, and they are keeping the price on high levels, so breakout is still possible, breakout is still probable here, which actually is my scenario for American dollar to Canadian dollar, so I'm looking for the American dollar to be stronger. Well, on dollar to ruble too, etc. And on American dollar to Swiss franc too as well, but here it's not working out well. What I have to say here is that even after the false breakout, the price is still pretty high, which is a positive sign for the buyers, and it may result with a further upswing. And now for instruments with yen. Yen is perceived as a safe haven currency. With all those increased tensions about the trade wars between China and US, we do have a risk-off mode, so traders are avoiding the risk. They are removing their money from stocks, indexes, from emerging markets currencies, and they are moving their money into safe haven assets like gold or Swiss franc or Japanese yen or the American dollar. Here we have a combination of two safe haven assets, so Swiss franc and Japanese yen, and as you can see, Japanese yen seems a bit safer right now. And I also do have a short position here opened yesterday, It's already on break-even point, so I moved my stop loss from here. I move it on a break-even point, and it's going really well. This setup is promoted by the gap breaking the horizontal support. This breakout is promoted by the descending triangle pattern. Traders tried a reversal yesterday. They created a pennant formation. Pennant is a trend continuation pattern, so it promotes this downtrend. And the breakout happened shortly after I opened my short position. The price went lower. Now it's creating something like a double bottom formation, but it does not scare me much. I'm looking forward for a bigger drop, for a stronger decline, and this may be a great long-term trading opportunity. Now Australian dollar to Japanese yen. Here also I can see a beautiful sell signal, maybe even better than Swiss franc to Japanese yen. So what happened here is the price broke the dynamic support with a gap, but here the price closed this gap. Here we have a price closing this gap. At the same time, we bounced from this dynamic support. We tested this dynamic support as a resistance. The test was positive for the sellers, and the price went down. So we do have a clear resistance here. It's a dynamic resistance, and those tops from this week. So price being below the yellow area is a strong signal to go short. And this is what the traders are doing actually right now. As you can see, we are on a daily lows. Now British pound to Japanese yen, which is also on a daily lows, on a weekly lows too. This instrument is beloved by the traders because of its volatility. British pound to Japanese yen broke the horizontal support here. It all started with the false breakout above the dynamic downtrend line at the beginning of the week. False breakouts are usually super strong trading occasions, and it's not different this time. So false breakout, price comes back below, sell signal is triggered, and the price goes down. Most recently, as I said, we broke this horizontal support and the price is declining, aiming lower. So I do see a beautiful sell signal here. So guys, this is the market right now. The biggest story is, let's say, New Zealand dollar, but for me the biggest story is the strength of the Japanese currency. So we should look at this a bit closer. And luckily, most recently, there are plenty of trading setups on the market. So sometimes I try to analyze the markets and there's nothing, absolutely nothing from the technical point of view, using my understanding of the price action. But most recently, we do have some decent setups, so let's use it. Thanks very much for watching the daily analytical report. For more trading occasions, visit our Twitter account and our website alpari.news.